Welcome, everybody. Welcome. I'm happy to see you here. Hoping that you can all hear me. I think if yes, please type in the comment sections. That'd be great. And I know also my colleague Simon is here. So Simon, hopefully can hear me. So Simon, if you can help me, obviously, whenever there is somebody in the waiting room, you could let the person in. So I will very much appreciate that. Yes. Excellent, excellent. So welcome to the session that we have today. So I'm delighted by this conversation. A lot of you have expressed interest about this topic. So we've decided that on a regular basis, we will bring and kickstart information. And today, I'm very much delighted to welcome leading voice in the design and structuring of high integrity carbon projects. Because, as the carbon market evolved, from the voluntary system to compliance under Article 6, the conversation is also shifting. I'm hoping that you've observed that. So it's no longer just about offset. It's about the credibility of the project, the measurable impact, but also the real economic transformation. So the gentleman that I'm going to bring to you here, so his work sits at the intersection of climate finance, technology, project design, helping shape a new generation of carbon initiative that deliver both environmental integrity but also tangible community value. So in the conversation that we will have just today, so just under an hour, so we have another 56 minutes to go. So what we do for you, it's sort of the how carbon market really work. So what define equality projects and how the continent of Africa and other frontier regions can actually position themselves forefront of the emerging asset class. So let me welcome my guest. So Mutafa can. So Mutafa, can you hear me? If you
Uh,
can, I'll be
yes,
grateful.
Tony.
You share your
Yeah,
screen. Can you hear me?
yeah. Thanks.
Excellent, excellent, Mustafa. So brilliant to be able to see you. So how are you today?
All good. Thank you. Thanks for the invitation.
Okay, well, it's definitely a pleasure. So I thought before we dive into the conversation, because people just gonna keep joining, so maybe if you can give us a very brief description of your background. So introduce yourself, and after that we can move into the conversation per se.
Sure, sure. Thanks. Thanks very much, Tony, for the introduction. So myself, I am Mustafa. I have a PhD in environmental sciences as way of academic background. I finished a PhD in 2008, and my PhD was also in carbon related subjects, carbon sequestration in forests and those kinds of works. So I finished in 2008, and that point of time, NBS wasn't a major thing. So at that, I joined a not-for-profit organization to begin my career. I worked there for 3 years. I was working in agroforestry, renewable energy projects, community-based housing projects, energy efficient housing. Those were the starting days. I worked there till 2010. In 2010, I joined Climate Connect. So that was my first stint. I worked in Climate Connect from 2010 to 12 for 3 years. So this was a time when, the compliance market, the Kyoto Protocol was coming down and the voluntary markets were replacing it. So we were helping the private sector, make this transition. Very interestingly, as you mentioned, Tony, now the reverse is happening. Now the compliance markets are coming back up again. So interesting full circle over there, right? And so I worked for 2 years at Climate Connect. And then in 2012, I joined the Swiss Agency for Development Cooperation, SDC. So it's a bilateral agency developing projects, helping the LDCs, developing countries grow and develop faster in a sustainable manner. I worked there for 10 years as part of the Swiss government. I I was team leader for various projects over there. Again, in the field of climate change mitigation, adaptation. There's a lot of social angle into it for this time. I worked there for 10 years, as I mentioned, and then in 2022, I rejoined Climate Connect. So this is my second stint here. So we are, managing a portfolio of projects across the globe, including several projects in Africa. So very interesting to see, such Africa-focused work is happening to me with guys like you, leading this thing. We are very hopeful that Africa will be able to create a good impression and have a substantial share in this carbon market. And sure, sure. So let me do that. Just let me know if you can see it, and then I start from there.
So it's coming right now. Yeah, we can see now.
All right, all right. So great. Then. So So as you were mentioning, Tony, we are talking about Africa's carbon renaissance. In the next slide, I'll get you a bit more light. Why are we talking about renaissance and what was happening? So moving on to the slide, if I can. Okay. So this is a set of a bit of context setting as to what was happening till now and what we are seeing right now. So in 2024, if you look at, right, and then people who have been in the carbon markets in the past 3-4 years would recognize this, and would relate to what I'm talking about here. In 2024, we saw a steep market correction in the carbon markets, in the pricing of carbon credits, etc. So we saw like approximately, a 22% drop in global credit demand. And then we was also, there was a demand destruction, you can say, and there was a 30 to 50% price drop in the carbon credit pricing as well. So the context was this, a lot of media articles came out talking about greenwashing, also about overclaiming of credits. So, full credit over there to the journalists and to the researchers who publish these papers and all. And in some cases, rightly so, they highlighted, that the number of credits that were being claimed by the projects was much more than was eligible. And in some cases, they were like over criticizing some of the projects, but it happened, right? So whichever way this demand destruction happened, the demand went down, the prices went down. So that was 2024 context. So now what has happened is that now, therefore, because of all these pressures, these driving forces, we have now transitioning into the 2026 frontiers now. So what's happening is that we are no longer looking for volumes. No, rather what the market is demanding is for higher quality, even if the volumes are lower, but they want a higher quality. And the market is ready to pay a premium, up to a 40 to 60% premium. And people in the room might be able to relate to this, that people want CCP label credits. So CCP is core card principal label credits, which essentially means, these credits are showcasing somehow that they have higher integrity levels, that they are additional, that they have a certain standard of methodologies which are available, which are CCP approved, which are ICBCM approved. And these are the credits that people are asking for. So people want integrity, higher quality of projects. Those are the things. So in the subsequent slides, we'll also see a bit more detail as to what do we mean by these higher quality projects and what's the things in various perspectives, that people are asking for. All right. So this is, a slide, just to highlight what are we talking of when we say Africa. It's like Africa is a huge continent. The big advantage, for Africa, while we're discussing these natural resources or the resources available, is that the population density of Africa is much lower as compared to Asia, right? And Asia is developing so fast. We keep hearing the stories. Africa, in a bit of a sense, has this advantage that the population density is lower. So therefore, the area available to do large scale natural resource projects is higher. So the area is much more available over here. So for example, Africa is also blessed with, 20% of the global tropical forests are also in Africa. It also happens to be having the highest global solar irradiation, which is very good for renewable energy based projects. The other thing is that, because a lot of these least developed countries are also located in Africa. So therefore the impact, the SDG impact, the sustainable development impact that you can create in Africa is much more, be it in terms of health, in education, or introducing better technology and capacity building. And then because the size of the continent is so huge along these opportunities, the markets are easily in the range of $10 billion, $100 billion. Of course, you see this wide range because this depends upon what types of projects that the projects also. So this is, more from a perspective of investors. So what we are trying to achieve over here is that, we have high integrity carbon finance arriving, but at the bottom layer, you already have this existing physical assets. So for example, you have a sustainable agriculture forest, agriculture project that was there. On top of it, you are layering the carbon finance part of it. So therefore, the revenues become addition. The revenues are twofold now, right? So you already had these traditional cost centers where you were spending money and then you were getting some outputs in terms of sustainable agriculture. What we are doing is we are putting an additional layer of carbon finance over there. So your expenditure is also increasing, but the returns are also rising that, right? So it's a layering thing that is happening. So you already have the basis of the natural infrastructure, the physical assets are there. And on top of it, we're talking about carbon finance and developing carbon projects. So there is a context, there is a base layer on top of which you are bringing these carbon projects. And therefore, we are converting them into revenue centers, as we're calling them on this slide. So just for an example, right? So we were talking about like there are different kinds of projects. So this is, I hope a lot of you might already be aware of this technology. So essentially what we are doing is we are introducing cook stoves which consume lesser amount of wood or lesser amount of fuel, right? Maybe coal or maybe wood, which is lesser amount now. And therefore we say that, because the amount of wood used is lower, therefore we are saving carbon. So that's the claims. So in the legacy model, what was happening is that we were depending just on estimated usage. So there was no guarantee whether the cook stove was used or not used. Just because we had distributed 2 million cook stoves, we were assuming that those cook stoves are being used daily, right? So that was there. And also, in some of these studies, some of the research studies, they have also found it increases the workload for women. In some of the cook stoves, you have to chop the wood into smaller pieces and then feed it into the fire rods. In sometimes the improved cook stoves, they cook food slowly. So women have to spend more time, putting more efforts for the same amount of food to be cooked. So those were some of these legacy models that was happening. So right now, what we're talking about is the next gen of clean cooking, which is based much more on technology. So what's happening is that we're transitioning into a Internet of Things, IoT monitored smart stoves. So these devices, they monitor the temperature, right? And if the temperature is not there, it means the stoves were not used, right? And they also measure the timing. So for how long this stove was used and at what temperature was it used. So the day, timing, everything gets recorded. And therefore the accuracy becomes much higher. You don't have to depend on estimates as much as you used to do earlier. And now we have lesser amount of estimates and higher accuracy. So that's what we're talking about, So these are transparent projects which can be much more, which are much more open to audit trails. You have an independent source of getting the data instead of just basing on our assumptions, right? So this is the thing. Apart from this, cook stoves, generally speaking, are also good on SDGs because they reduce indoor pollution. So of course, they are also very good for SDGs. And of course, corporate buyers would be interested in such projects. All right. So there are some more examples, right? So there are also like some tech heavy carbon and industrial decarbonization projects as well. These are new wave projects, you can say, in a sense. One is like the biochar and ERW. ERW stands for enhanced rock weathering. So in biochar and ERW, both of them are very long-term projects, right? So once the carbon is inside the soils, they have like a 1,000 plus years of permanence. So these are really, really permanent projects. As in a stark comparison to afforestation projects, where the trees can be cut down or a forest fire might take place. Over here, once these things are in soil, they are there for 1,000 years. Similarly, you have more advanced technology projects like green hydrogen, where you're using renewable energy for generating hydrogen, etc. Similarly, methane capture, for landfill projects or waste to energy projects. And these projects are really good because the institutional hook is there, because these projects have indisputable additionality. These are projects which are really heavy in terms of capex opex, and if somebody is not putting the money into it, these projects would not take by default. I mean, how many of these ERW and biochar projects will happen if carbon credits are not sold on top of these projects? They won't. How many of these green hydrogen projects would take off if carbon credits are not being provided to such projects? So therefore, the additionality is very high. When we say additionality means would this project take place if carbon finance wasn't there, right? So if the answer is no, this project will not take place if you don't provide carbon finance, it means the project is additional, right? And if the answer is yes, this project would have anyway taken place, whether you give carbon finance or not, it clearly means that the project is non-additional. Right. So additional projects which have additionality in them are treated at a higher quality, right? Because you are clearly demonstrating that these are deserving projects. Right? They wouldn't have taken place if you did not fund them from the carbon perspective. So that's one. Apart from that, so ARR projects are already there, Red Plus projects are there, but I also wanted to highlight some new concepts over there. Something called the blue carbon projects and the teal carbon projects. So the blue carbon is that, if you're doing some mangrove projects, so along the coastlines, so Africa has a number of coastal countries as well. So over there, you have some opportunities of doing nice mangrove projects. So mangroves have been under a lot of pressure, for deforestation. So if you're replanting or conserving existing mangroves, you can claim credits for that. Similarly, if you're doing wastewater treatment, and you're avoiding the leakage of methane back into the atmosphere, those are also get counted. You can claim credits on them. So that's for wastewater treatment. On top of it, when you talk about the technology, I mean, there's not a single day, when we are getting bombarded by headlines on our mobile phones or TV that, that AI is happening and the artificial intelligence is taking up and you have technology everywhere. So this is no surprise that, in the carbon markets also, we have a lot of this talk. So what we call the digital MRV stack, the monitoring, reporting and verification stack. So digital MRV. So the three key components over there, there could be others as well, depending on the kind of project, but just for simplicity's sake, I have just depicted three of them. For example, you have satellite AI, right? So for example, if you're doing a forestry project, you can measure to the resolution going down to centimeter level, so every centimeter square can be mapped using satellites these days. So that's the level of resolution that we have. Similarly, you have ground-based IoT devices. So for example, if you're talking about flow meters, you want to measure volume of gases, flow meters can be there. You can also measure indirectly, soil carbon content by using these near ground devices, which are IoT based. Similarly, you have blockchains, which are used for, immutable transfer of rights. So how do you trace the carbon credits from the ground to the registry, to the buyer, to the seller? All those things can be done on immutable blockchains, which are very difficult to replicate, provides you full singular and traceable technologies, for each and every credit that you're generating from your projects. So that's something which is happening in terms of technology. The other angle to it, so we have talked about the technology angle of it, we have talked about the finance angle of it, but there's an equally important angle on the community part of it. So the communities, the people who are on the ground, they are a very essential part. These projects won't sustain. I mean, carbon projects are like 30-year, 40-year investments to talk about, and them, without engaging the community is very difficult. So that you need to have the community buy-in. So stakeholder consultations is not just for stakeholder consultations, but they're also an essential part of ensuring the sustainability of your initiatives. So how do you do it? So some of the governments have also worked on this. So the governments are also bringing in laws of to what amount of, profit sharing, or carbon revenue sharing rather from carbon projects should happen with the community. So 30%, 40% of these direct benefit transfers, so what we call DBTs or direct benefit transfer to the community hands can be happening. So this could be in cash or in kind, but taking in the community trust, and making them stakeholders and shareholders in a sense is very important because this protects you against the political disruption. So it's like a social insurance, right? And also helps from physical sabotage of the project on ground. So both of these are prevented if the community is on your side. Next, moving on to the point of, Tony was mentioning about Article 6, and Article 6 is a really interesting thing, of providing projects with compliance, of giving the projects a compliance layer on top of what they're doing. So when we are talking about gold standard, when we are talking about Vera, these are voluntary registries, right? So if you register your projects under Vera or gold standard, they are voluntary projects. But if you take these projects under Article 6, right? If you have the government's buy-in, if the governments are endorsing your projects, if the governments are seeing that, okay, what we will do is we will adjust our greenhouse gas inventories and then allow this project to sell its own credits in the international markets, that's the corresponding adjustment. So the government is adjusting its national registry and giving those credits to the project, right? So that becomes a really high quality project because you're completely avoiding double counting. If a project is claiming those credits, the national government is not claiming the same credits in the international in the international stands, right? So that's avoiding double counting. So people appreciate projects which have corresponding adjustments to it. And therefore Article 6 provides for such kind of mechanisms. So if your project is endorsed under Article 6 with the host government, you get a lot of additional appreciation for it in the markets in terms of pricing power for the carbon credits, right? Similarly, the additionality terms both Vera, Gold Standard, and other registries as well, have brought in additional measures to identify how this additionality is proved. And a lot of this is in terms of, taking assurances from the national government that, that these projects are correct and what they are mentioning is right. So in some cases, plans need to be endorsed by the government. So that's an additional guarantee that these projects are additional because the governments are also involved in it. So these are the kind of things, but sorry, in terms of additionality, what Vera and what and are also doing is that they are pushing for digitalization of the methodologies as well, right? So the methodologies are insisting that the project is monitored by use of technology, by higher integration of IT methods, AI methods into them. So there are examples of methodologies which are digital first right now. So that's an interesting transition also that's happening. All right. So now we're talking about, the capital stacking. Some of you on the call over here today might also be engaged in the carbon projects, not from the bottom up, but from the top down as investors or project developers who want to develop projects and want to understand, how do I secure funding or should I lend money to a project or not? So this is a very high level picture, of what kind of financing can be done. Some of the projects might not need all three layers to be clear. Some of the projects might need all three layers and additional sources also, right? So it's not like that you have to have all three layers of funding for each project. It's not like that, but just a demonstration of what kind of options are available for funding a project. So for example, if you're talking about risk aversion, so if you find a situation where the risk is very high. So for example, if the geographical risk is high, or you're working in a country where the political risk is too high or something else is there, over there, grants and development financial institutions can step in and provide some seed capital. This could be in terms of first loss buffer so that, in case a project suffers a loss, they are the ones to absorb those losses first. And therefore, they drive in a lot of private sector funding on top of it because these agencies are absorbing the losses. So therefore, private money is more secure and confident to pitch in to these projects. At the layer two, so this is known as the mezzanine debt. This could be plain debt or mezzanine debt as well. This is in terms of bringing in private debt. So mezzanine simply means that, people give you a loan for implementing your project, but then they also have equity options. They don't have equity directly, but equity options, right? So this gives you access to money, access to capital for implementing your projects without diluting your equity in your company, right? So you keep your shares, you keep your equity, but you still get capital. On the other side of it, the lenders have more surety that, they have an option of getting equity into the projects, and therefore you are able to access those funds. So it's like mutually beneficial for the lenders as well as the people who are taking the loans. On layer three, you have the pure private equity, right? This is where people are coming in and putting money into projects or setting up joint ventures or special purpose vehicles, SPVs, to implement projects. So this could be between companies, this could be between the private sector and NGOs. All sorts of structures are allowed over here, the private equity. But then over here, what's at stake is not about 0% returns or about debt, but it's more about the upside premiums, right? So whatever profit is there, that needs to be captured in the such kind of layering. So this could be upside of 40 to 60% price premiums once the credits are issued. So these are the people who are looking for the long term of it. Once the project starts issuing credits, the credits will be sold, and then the money will come in, but then you will get a higher returns on terms of your investment. So this is the layer. This is a bit more in detail about people who are worried about how much returns can I get. So if you look at the projects, we just talked about the layering of the project. So you already have a physical asset. On top of it, you do the carbon project. So 15 to 22% internal rate of returns. This is something that can be targeting high integrity risk mitigated African carbon projects. What we have given on is just purely for representation purposes. These numbers can vary, the distributions for these numbers can vary from project to project basis. So this could be distributed between the communities involved, as you mentioned, to how to engage the communities. Of course, the project CapEx, OpEx expenditures will also be there. You need to spend money to set up the projects, infrastructure, hardware, management structures, monitoring, Next is also on the DMRV stack. So you have these satellite companies who need to pay. You also have this hardware that you might need to buy to install on the ground, setting up the packages, buying some hardware for your stack. So those kind of things rests there. Plus also a new margin in investor yield. So of course, all the people who have put in the money, either debt or equity, are expecting returns from the carbon projects that you're setting up. So of course, some share of this returns would also go to service those clients as well. So this is the regulatory setup. So once you understand this, okay, I get this, but so people generally become curious. Okay, so which are those countries which are like best place to do this? Which are the other countries where we can do? How do you start thinking about this, right? So if you look on the left hand side, this is the regulatory map. So these are, we have just classified the countries. This is again, this is nothing standard. This is very, very, subjective classification, you can say. And of course, your opinion might be different from my opinion. But, in tier one, we are trying to put countries which have like carbon acts in place. They have their own national registries in place. So you can have countries like Kenya, Ghana, over there, Rwanda. So they have the registries in place, and therefore they have this set structure now, Okay, so they have a policy framework. So it gives you more certainty, okay, this is how the things are going to happen. This is the my project is going to get listed, and these are the agencies who will give me the stamp of approval for the Article 6, right? In tier two are the countries which are in the process of developing these standards, these frameworks, these registries. National carbon acts are still under preparations. So they're under preparation. So these are countries like Nigeria, Tanzania, South Africa. And then in tier three, you have the LDC countries. This is the actual frontier of carbon markets, So you have the high, but on the flip side, if you work in the LDCs, you have the highest additionality, right? But this is the place where you need to put most resources in, because the structures are not there. The policy framework is still not there. But then it's very easy to prove additionality. It's also very easy to demonstrate the impact of your carbon projects in such countries, in tier three countries. So it's not like you have a different set of advantages in tier one countries, and you have a different set of advantages in tier three countries. So it's not, there's no standard answer as to what you should do. But if you are working in a tier one country or in a tier three country, you should be very clear, about the expectations of what you will have the advantages and what are the disadvantages that you'll face. On the right hand side, we have tried to take a perspective, from how to deal with the perspective of the strategy, So for example, you can have advanced agreements in place. You can secure a floor prices for the carbon credits that, the minimum amount that you will receive once you start generating carbon credits is XYZ. And then you can have top tier companies, for example, Google, Microsoft. They can also deploy prior capital, as you're just talking about capital. So what they do is they sign these pre-purchase agreements before the project starts to get issuances. They come in, they get a discounted rate on the carbon credits maybe, but then they get to keep the carbon credits once you start generating them. So what happens is that, so there is a guaranteed revenue stream, which is assured for your project if you do this. The project also becomes viable because this is a big corporate which is giving you a long-term contract for 5 or 10 years to buy credits from your project. So your project becomes bankable. Then you can take that contract to a bank and show them the contract. So it becomes easier to negotiate with banks to get the loans, etc. On the flip side, so these companies get a short supply of good quality carbon credits. So that's the advantage for them. And they are often getting it at a discount, maybe because they're early movers into the project. They are taking risk in the project developers. And this is, where we are talking about why this year is critical. So we saw that, a lot of demand destruction took place in 2024. So we are now 2 years past that. This is the inflection point we are getting now. As market participants, we are seeing a large number of projects now starting developing in Africa. So we are really seeing this thing. In 2026, what's happening is that high quality ecological sites or project opportunities in tier one countries, is very limited. It's not unlimited, right? Africa is a large continent, but still there is a limits to it. So you can't have unlimited number of projects. And the first mover advantage is there. So if you are the first mover, you get to occupy the best projects, you lay claim on the best sites for your carbon projects, and that's what is happening. So if we want to have these projects, if you want to have the best projects and the best sites, this is the time that you move and start capturing on this momentum. So this is in our essence, I mean, encapsulating what we discussed. What we have been seeing that a lot of this work is happening under ESG. This was about charity, but what is happening is that now there is a real sense of urgency, and people are understanding that carbon markets can provide you that transition from the charity to the pure markets, and this is how you move along it. So carbon markets are in a sense a bridge from the charity world to the entirely capitalistic world. So even the country heads are very much aware of this. For example, William Ruto, His Excellency William Ruto, the president of Kenya, recently mentioned that aligning incentives to achieve net zero industrialization and shared green prosperity. So that's how the political will is there, and that's why we need to capitalize on this. There's an opportunity out there. It is going to benefit the communities, it will benefit the entrepreneurs, and it will benefit the environment. So this is a win-win-win. And such opportunities are not infinite. So there are limited number of opportunities that we need to work upon. So in case you're wondering, what are the next 3 things that I should be doing? So number 1 could be, if you have something in your mind, you should have a feasibility done for it. Is this project feasible? Is this project not feasible? If feasible, which is the best registry? Which is the methodology that I can start working on? So that's number 1. The number 2 is that, in parallel, you can also start working with your host government. So the location of the project. So which is the host government over there? Do they have a carbon architecture in place? Do they have a national carbon registry? Are they giving letters of authorization? Those kind of questions, so you start engaging with the government. The third is you start to capitalize, you start to mobilize capital for implementing your project, right? So the moment you have a feasibility study and some sort of engagement with the government, you get a clarity, right? And the people who are deploying capital will look into the first 2 things. Is a feasibility study in place at minimum? Is the government endorsing the project? Which country is your project in? So these are the 2 primary things which investors also look for. So these are the 3 things that are the primary layer if you are starting to plan a carbon project in Africa. So that's all from my side, Tony. Yeah.
Excellent. So I was just about to tell you maybe to bring it to a close, but that was brilliant. That was a great presentation as usual. And gentlemen, so what I would say, I'm sure, gentlemen, ladies, obviously, I could see there's a lot of question in the chat. So what you do for me, please just drop your question in the chat. I don't think we'll have a chance to cover all of them, but we see whether we can actually gather them and obviously create content to share with all the people who attend this webinar. I had some questions for Mutafa, but actually I'm just going to give a priority to you guys because I could see there's some question out. So what we're going to do, Simon, I know there is a question. Simon is my colleague in the comment. I know there is a question. There are questions there. So if you let me know who asked a question, because I like people, maybe if you want to raise your hand, I give you a chance, people, we will unmute you and you can ask a question as well, just verbally, or if you prefer, we can also read that. But is there anybody has a burning question, want to go ahead very quickly? Because I think I want to make good use of the time, because obviously we have another 20 minutes. After that, we need to bring it to a close. Is there questions? Anybody? There were questions in the chat. So who will raise your hand and or let me know. Or Simon, what's the first question you could see in the comment? Maybe I'm going to unmute the person myself quickly.
We have can you hear me?
Yes, I can hear you well.
Okay, we have a question from Emmanuel ACN.
Okay,
So-
Emmanuel ACN, I'm just going to unmute him. I've asked you to unmute Emmanuel. So if you can unmute yourself and ask your question, and Mutafa will handle that. Please make it short. Just keep it to one question if possible, so that we can capture as many questions as possible. Emmanuel, can you hear me? Yes, you're unmuted.
Yes, can you hear me too?
Brilliant. See that?
All right, thanks.
So
Because of time, I actually typed it earlier, but let me just quickly read it. I'm thinking of the Cocoa networks in Kenya. It didn't mention
can we
ready.
do you have your
Yeah.
camera on? Can we see it? Can you?
Okay, just a minute.
No problem.
I'm not in an environment where my camera could actually function right now.
If it doesn't work, that's fine.
Let me read it out. So I'm thinking of the Cocoa networks in Kenya. And Mustafa mentioned Kenya in terms of readiness and government regulatory policy framework in place. However, what happened now with the collapse of cocoa actually indicated that that framework kind of weak or whatever. So my question in essence is, when it comes, we play in the stack of three, the tier three that Mustafa presented, the private equity space, and we consider this very well. So in terms of regulatory confrontations, market integrity, investor confidence, and what will you consider to be the best approach in order to maintain environmental integrity and economic sustainability? That's just my question. Because Kenya is top, and you mentioned it, and we had this happen just 2 months ago. Thank
Yeah.
you.
Yeah, before you jump in, Mustafa, can you maybe remove your presentation from the screen so that we can see you when you respond to people, if you don't mind? Stop sharing. Okay, excellent. So who is the next question, Simon? I can unmute the person, get the person ready while Mustafa is responding.
Okay, the next question is from Trinto Ogangu. They
Trinto.
asked whether they can get this presentation after the meeting.
Yeah, okay. Mustafa, if you wanna carry on, and Simon, just let me know who's the next one in message, and I unmute the person. Mustafa?
Sure. Yeah, I mean, very, very interesting question. I mean, so of course, in Kenya, you have a carbon act in place. There is a carbon registry also in place, but, things happen. And just mention, I don't want to take names, but yeah, I mean, as the gentleman mentioned, situations do take place. The number one way, of hedging such kind of risks that, the government might not allow or allow initially and then not allow some of the projects is to keep a portfolio approach. I mean, this is very easily said on a call, but then that's essentially what we are trying to do. Don't bet on a single project or on a single location, right? So, because some of these regulatory changes might happen, some of the regulations might be in place, but the implementations might not be taking the way that we're thinking about. So, if a diversified portfolio across one or two jurisdictions, across one or two types of projects is something that, is often done in terms of even equity investment. So we need to learn something from the equity investors and maintain ourselves and hedge our bets also in a similar sense.
Okay, that's fine. Excellent. Hopefully respond to your question. So guys, what I'm gonna do as well, so if anybody has a burning question, want to have a follow-up conversation, so what I've dropped in the comment box now, it's my calendar link. So you can definitely book your one-to-one meeting so we can see whether we can arrange a follow-up conversation. Is there any other burning question from somebody? If yes, I will mute the person now. Simon is telling me that he can't see any other questions in the comment. I had a feeling that there's other questions. Anybody has questions apart from wanting? So I think Judith was asking. I could say, Judith, you talked about Zimbabwe. Let me unmute you if you're still around. Yeah, Judith's here. So good. Judith, I think if you could jump in and ask your question.
Okay, thank you so much, Tony. When Mustafa was speaking, he was referring to those countries which are ready and with some legislation in place regarding to carbon trading. So I just wanted to know about the recent one that was passed in Zimbabwe through it's the first one to register the blockchain one. Yeah, it's the blockchain one. So I just wanted to check with Mustafa around that chain registration that is happening in Zimbabwe at the moment. Thank you.
Yeah, Mustafa, you are on mute.
Absolutely, absolutely. So, I mean, Zimbabwe is a perfect example, of what we are seeing in Africa in general happening. So what people think is that, are unregulated markets and that, anything can happen. And there's the amount of variation or, uncertainty that people have in mind in relation to Africa is actually much more than what is there in the reality. So in reality, a lot of these countries are moving very fast, much faster than what we can imagine and process sometimes. So for example, one of the points you just mentioned is that, Zimbabwe has put in place a full stack, of carbon regulations and carbon market regulations. So they have transitioned into this compliance only model, so as to say, right? So you have all these rights, property rights also regulated for carbon markets. This is a perfect example of what I want to talk about, as to people imagine it to be much more uncertain, than it is actually. So yes, absolutely agree with you. So you have this blockchain-enabled carbon registry in Zimbabwe. This is a much more traceable technology as compared to others. You have a guarantee that, there's a one-for-one link between how this carbon credit is getting generated, from where it is coming, and who is buying and selling it, for the entire chain, from the initial issuance to the last person who is canceling or consuming the credit in their field.
Excellent. That's brilliant. So I think Aaron, just get ready. I'm just gonna unmute you now. And while Aaron is getting ready, I just want to say that yes, we're gonna share the recording of the presentation. Is gonna be on our YouTube page. So by the weekend, that's fine. So if you obviously subscribe to our YouTube page just right now, the link there. I just want all of you to go there, and we'll be sharing that here. But Aaron, you are next with your question. I can see you had a bunch of questions there. So if you can limit that to maybe one, we could
Yeah.
potentially take a second, but after that, yeah, it'll be too much.
Yeah, so my main question really is, so
Can you have your camera on? I like to see you guys, right? I like to see who I'm
give
talking
me a
to.
second, let me,
Come on.
you call me at a bad time.
Don't worry. I'm sure you all handsome.
Sorry, I can't share. It's not working for some reason. Next
Okay.
time I'll share, definitely.
problem, that's fine.
My question was, so I'm working on a project at the moment, and we're looking to introduce solar PV to fishing communities. So at the moment they use firewood to preserve fish. So my question is, are there any methodologies that are well suited to certain value chains? So for example, this fishing community who rely on firewood, are there any pre-made methodologies that we could use? Or are there any that are well suited to that project?
Yeah, I mean, so Aaron, a very valid question. There are a lot of communities, in Africa, even in Asia, who still use firewood as a source of cooking food, for example, in the kitchens, etc., on a daily basis. So, of course, so as I was just mentioning during the presentation also, you have these methodologies for improved cooking stoves. So these methodologies are there on gold standard as well as on Vera and other registries also. So these methodologies allow you to calculate the amount of firewood that is being used now by these communities. And then you again measure the amount of firewood, that's being used once the improved cooking stoves have been given. So the moment you give the improved cooking stoves, the fuel consumption should ideally come down, and that is measured. And that's what leads to generation of carbon credits. So yes, there are methodologies available both on Vera as well as gold standard, which are dealing with improved cooking stoves and which incentivize reducing the use of fuel wood.
Okay. Is there a registry of like different methodologies? Is there any one place where we can find like a list of these different methodologies?
No, I mean, so every registry has their own set of methodologies. So you can go on gold standard registry and look for methodologies on improved cooking stoves. You can also go on Vera and then look for improved cooking stove methodologies, or simply you can go to Google and ask for, methodologies for improved cooking stoves on Vera and gold standard, and Google gives you 2-3 links on both gold standard and Vera.
Okay. All right. Okay. Thank you.
Thanks for that, Aaron. Much appreciated. Is there any other questions somebody want to jump in and ask? So that would be good. Okay, so quick question for you, Mustafa. I want to know, because obviously you talked about the voluntary and the compliance. Just make it clearer, even one for all. What are the difference between the two, and why are both matter today? Why are they both important?
Yeah, excellent question there, Tony. So voluntary markets are where, there is no government regulation which is asking you to, do things, reduce your carbon emissions. And, and companies are doing it voluntarily. Companies are doing it out of their free will that, okay, nobody's asking us to do it, but we want to be, socially responsible and want to reduce the emissions. And therefore they're entering the market. So these are voluntary markets. So there's no pressure there. In compliance markets, the governments are setting up targets on companies, on public entities, on private entities, that you cannot emit more than this amount of tons of CO2 per year, right? And if you are doing it more than this, you have to offset it in the compliance markets by buying some of these credits under the allowed mechanisms. So this is where Article 6 comes in. So Article 6.2, 6.4 to be precise, under the Paris Agreement, these allow these international trade of mitigation outcomes or carbon credits or offsets. But these need to be endorsed. So, and this is legally required by the companies to do. Therefore, it's known as compliance. So that's the key difference. And I was just explaining, they have their own unique place. So compliance could, for example, the compliance might say that this company needs to reduce its carbon emissions by 20% by next 1 year, right? So this company makes the efforts, they reduce their emissions by 20% by in-house mechanisms, right? So they don't need to buy carbon credits because they have done something in-house. They have replaced their fuel by cleaner fuel. They have installed some energy efficient, machinery in the industry, and therefore they have reduced the energy consumption by 20%. So the target is met by in-house measures. So they don't need to buy the carbon credits. So that's compliance. But if the same company says that, okay, the government is asking me to reduce my emissions by 20%, but I want to challenge myself more and I want to reduce my emissions by 100%, right? So I do the 20% under compliance as the government wants me by in-house measures, but for the rest 80%, I still go out there in the voluntary market and buy the offsets, right? So by buying those offsets, it's like a positive step on the behalf of the company. So they are doing much more than what the government is asking them to do. So by doing this, they are promoting positive action in the real world. They're also benefiting the communities, and they're also enriching the environment in which these industries exist. So that's the beauty of this market, right? So compliance is what you're asked to do, and voluntary is what you want to do even more than what you're asked to do.
Excellent. So thank you very much for that. So I'll take the last question from Faith. Faith, I think if you could ask a question, I think if you have your camera, that's great. Otherwise, it looks like people are shy showing the camera today. Faith, are you here? I've unmuted you. Can you hear us? I can see you've been unmuted. Faith?
Hi.
Yes, I can hear you now. Yes.
Yes, hi.
Yes. So is your camera on
Yes.
or not? Okay. Ask your question in Faith because we're about to wrap up. Okay. She may struggle a little bit.
Okay, so my
Yeah, go ahead.
question is in the direct.
Mm-hmm.
I don't know what he is. I'm kind of struggling with the internet is.
Okay. No problem. So in that case, I can read your question.
Because I know megawatt, I'm in the same industry.
Faith, that's fine. I think let me help you out because I can see effectively that your connection is not great here. So essentially, Faith is asking you questions. So how are IREC generated and how can I sell carbon from that, carbon credit? So I think I can ask very quickly the first question, and the second maybe Mustafa can take it. IREC generated. First of all, IRECs apply purely and simply to renewable energy projects. So that's what you want to have, which is strategy from carbon credit, which is much more broader. And to generate IREC, you need to have an operational renewable energy asset which is functioning. So once you have that, you have to register your device. You need to register your device to the right registry, and there's a procedure that goes with that. And once you register your device, so now it can be the IREC can be sold. So the good news is obviously you can reach out to us for that. I think we could help you have that all set up and tackle. So Mustafa, do you want to respond quickly to how can I sell the carbon credit? So how can I sell the carbon credit? I also have a very quick response to that. So we have launched end of last year a platform called AfroCab Lite, which is actually helping people owning carbon credit to sell it to global market. So if you have a carbon credit project that you're looking for buyers, so reach out to us. We would obviously be able to help. So what I do again, I know there's lots of links, but you're asking the right question. Let me just help you out. So I'm just going to share as well the AfroCab Lite platform here. So the link, I've shared that. So I've shared the link, so you can just go to have a look so we can respond to that one. Mustafa, are you still with me? I can let you respond in 60 seconds.
Yeah, I'm here. Yeah, thanks. A very interesting question. So once you have the carbon credits, the difficult part is getting the carbon credits. So once you have the carbon credits, of course, as Tony mentioned, you can of course use the AfroCarb marketplace, as an example of site, where you can sell the carbon credits. But then there are like other resources as well, So these are usually companies which are based in Western markets like USA or Europe or Japan, maybe, who are interested in buying such carbon credits. So AfroCarb is an excellent place, which creates those links with the Western markets, where Western clients get to see an opportunity of various projects listed in one single place, or you can actually, directly reach out on a one-on-one basis to some of these companies who are on the lookout for interesting opportunities to buy the carbon credits. But then you have to deal with a lot of them on an individual basis, So I would definitely recommend a platform such as AfroCarb that Tony has.
Excellent. So thank you very much, Mustafa. So we'll have to bring it to a close because fortunately, like I say, so time has already run out, but very, very much interesting conversation, presentation. Thank you very much again for making yourself available, Mustafa. As I say, for people who want to know more, so we've dropped the link in the comment section where you can actually book a one-on-one meeting with us. So both RIA and Climate Connect will be happy to sit down with you and see whether we could advise on your project. So we share a few links there that you also want to look at. So a YouTube where we're going to have the recordings and the AfroCab Lights if you're looking to sell your credit. And I think what is actually left for me to say is that, again, thank you, Mustafa, for breaking down what is often a complex and misunderstood space. And carbon market, they no longer just financial instrument, but as you could see, as Mustafa shared, they are a system aligning climate, capital, and communities. And high integrity projects, they require rigorous design. That's why you have to reach out to the right people, and we certainly could help. They need transparency and also strong partnership. And within RIA, so we see carbon market as eco-bridge connecting the global capital with local impact. So thank you very much for joining us, as I say. So it was a pleasure to have you. And I'm hoping to host you for another webinar very soon. Okay, guys.
Thank you. Thank you very much, Tony,